when business going to record information by using double entry system, this is the theory should be applied. If asset and expense increase as a result of transactional events, those are should be recorded debit side. If asset and expense are decreased as a result of transactional events, those are should be recorded credit side. And liability, capital and income, if those are increased as a result of transactional events, should be recorded credit side. And if those are decreased, if effect for liability, capital and income is decreased as a result of transactional events, should be recorded debit side. This is the thing, keep in mind. This is a theory you have to apply when information recorded in the ledger by using double entry system. Right now, see the example number 1. It has given cash sales 9,000. As a result of cash sales, cash increase, sales increase. Cash is asset increase, therefore cash account debit. Sales increase, sales is income increase. If income increase, should be record credit side. Think about asset and expense increase, should be record debit side, but income, liability and capital increase should be record credit side. Therefore, cash asset increase debit side, sales income increase credit side. Therefore, cash account debit 9,000 and sales account credit 9,000. Cash account debit side 9,000 as a sales, name of other ledger account, and sales account credit side 9,000 as a cash. This is a cash sales. Then second one, credit sales. As a result of credit sales, sales increase, income increase, as well as cash is not received, receivable, those are called debtors. It is equal trade receivable. Therefore, trade receivable increase, sales increase. Trade receivable is asset increase. Therefore, debtors account debit. And sales is increase, sales is income increase. Therefore, income increase, sales account credit. Therefore, debtors account debit, sales account credit. Think which element change. Debtor increase, sales increase. Debtor is asset increase. Sales is income increase. If asset increase, asset account debit. Therefore, debtors account debit, sales account credit. Double entry system. Basic theory, if asset and expense increase, debit side. If asset and expense decrease, credit side. Liability, capital and income increase, credit side. If those are decreased, debit side. Additional third one, sales return 4,500. Those goods have been sold on credit basis. As a result of sales return, debtor decrease, trade receivable decrease, receivable amount decrease, as well as sales decrease. Sales is income decrease. Therefore, sales return also income decrease. Think about sales. If it has return, if there is a sales, debtor increase, sales increase. It opposite side. Debtor decrease as well as sales decrease. But it should be record separate ledger account as a sales return. Therefore, income decrease, sales decrease. Therefore, sales return account debit. As well as receivable amounts, debtor decrease, asset decrease. Therefore, debtors account credit. Think about credit sales, it opposite side. As a result of credit sales, debtor increase, sales increase. Asset increase, income increase. If it has return, it opposite side. Income decrease, asset decrease. Therefore, income sales return decrease. Therefore, sales return account debit, debtors account credit. Sales return account debit side 4,500 as a trade receivable and debtors account credit. Trade receivable account credit as a sales return. Then think about fourth one, relevant for bad debts. 500 worth of debtor was written off as a bad debts. Bad debts mean debtor value cannot be recovered. It is confirmed. That is expense. As a result of bad debts, expense increase and asset decrease. Debtor decrease and bad debts expense increase. Therefore, bad debts is expense increase. Therefore, bad debts account debit and debtor decrease, trade receivable decrease, asset decrease. Therefore, trade receivable account credit. Bad debts account debit, trade receivable account credit. Therefore, bad debts account debit side as a trade receivable, and trade receivable account debtors account credit side as a bad debts. Think about double entry system, debit and credit methods. All the transactions should be recorded in the ledger accounts. Basic theory, this is theory. This is thing keep in mind. If effect for asset and expense increase, debit side. If effect for asset and expense decrease, credit side. Liability, capital and income, if those are increase, credit side. If those are decrease, debit side. Then think about example number 5. Cash received 9,200 from debtor and discount allowed 800. Think about cash increase 9,200, asset increase, discount allowed is expense increase, and both value effect for debtor decrease. Think about there are 3 effects. Cash increase, asset increase, cash account debit. Discount allowed is expense increase. Therefore, if expense increase, discount allowed account debit. Both value effect for debtor decrease. Debtor is asset decrease. Therefore, if asset decrease, debtor's account credit. Therefore, discount allowed account debit, cash account debit, debtor's account credit. Discount allowed account debit side 800, cash account debit side 800 as a debtor, and debtor's account credit separately as a discount allowed and cash. Think about double entry. Cash account debit, debtor's control account credit, discount allowed account debit, debtor's control account credit. Discount allowed is expense, effect for debtor decrease. Cash received, asset increase, and debtor decrease. Asset increase, asset decrease. Expense increase, asset decrease. Think about dual effect. Cash received from debtor and discount allowed. Think about cash, think about discount allowed, think about debtors. Next one, 6. 6 it has given. 6 relevant for expense. 4,900 worth of electricity expense was paid in cash. Expense paid in cash. Therefore, expense increase, cash decrease. That is a dual effect. Expense increase, therefore expense account debit. Cash decrease, asset decrease, cash account credit. Electricity expense account debit, cash account credit. Therefore, electricity expense account debit side and cash account credit side. Expense increase, asset decrease. Electricity increase, cash decrease. Expense paid in cash. Next one, expense is not paid. 7th one, 1,200 worth of electricity expense relevant for this financial year was not paid. Expense not paid. Think about 6th one, expense paid. Therefore, cash account credit, electricity expense account debit. But 7th one, electricity expense not paid. Expense increase. Therefore, electricity expense account debit. But not paid in cash, it is not effect for cash, not paid. Not paid mean accrual expense. Accrual expense mean liability. Electricity expense payable. Accrual electricity, that is a liability. Therefore, expense increase, liability increase. Accrual electricity is liability increase. Electricity expense is expense increase. Therefore, liability increase. Therefore, liability account credit, expense account debit. Electricity expense account debit, accrual electricity account credit. Think about expense relevant for this financial year was not paid. Electricity expense account debit, accrual electricity account credit. As a description, name of other ledger accounts. Here, name of other ledger accounts. Think about expense paid, expense not paid. And next one, expense prepaid. 8,500 worth of electricity expense relevant for next financial year. Important. Was paid in cash this financial year. This financial year paid in cash, but expense relevant for next financial year. Therefore, those are called prepaid expense, but paid in cash. Therefore, prepaid expense increase. Prepaid expense is an asset increase. Therefore, prepaid electricity expense account debit. But paid in cash, cash decrease, asset decrease, cash account credit. Therefore, prepaid electricity account debit, cash account credit. Therefore, you have to prepare prepaid electricity expense, this one. This one prepaid electricity expense accounts, debit, and cash account credit. Here double entry cash accounts. Therefore, here description as a prepaid electricity and this one as a cash. Paid in cash, cash account credit, but that value not relevant for this financial year. Therefore, prepaid electricity is assets. Expense paid for next financial year. Think about there are three parts. Expense relevant for this financial year was paid. Next one, expense relevant for this financial year was not paid. Accrued electricity. And eighth one, expense relevant for next financial year was paid. That is a prepaid. Therefore, expense, accrual expense, and prepaid expense. Think about ninth one, relevant for income side. Rupees 2,800 worth of rent income, worth of rent income relevant for this financial year was received in cash. Relevant for this financial year, received in cash. Therefore, cash increase as well as rent income increase. Cash increase, asset increase, cash account debit. Rent income increase, that is income increase. Therefore, rent income account credit. Cash account debit, rent income account credit. Try to recognize dual effect. Cash increase, rent income increase. Cash is asset increase. Therefore, cash account debit. Rent income is income increase. Rent income account credit. Therefore, cash account debit. Rent income account credit. This is a double entry. This is a ledger accounts. Then 10th one, 1,200 rent income relevant for this financial year was not received in cash. Not received. Rent income but not received. Therefore, it is notified for cash now. Rent income receivable is asset. Income increase, asset increase. Rent income receivable is assets. Therefore, rent income increase. If income increase, rent income receivable increase. Rent income receivable increase. Asset increase. Therefore, rent income receivable account debit. As well as rent income increase. Think about rent income and rent income receivable. Rent income increase. If income increase should be record credit side. Therefore, rent income receivable account debit. Rent income account credit. Rent income receivable debit side. Rent income account credit. If asset and expense increase, debit side. If asset and expense decrease, credit side. And liability, income, and capital, if those are increased, credit side. If liability, capital, income, decrease, debit side. Think about rent income received and rent income receivable. And next one, very important, 1,500 worth of rent income. Worth of rent income is relevant for next financial year. Think about it, it is not relevant for this financial year. Is relevant for next financial year. Was received in cash this financial year. Those are called rent income received in advance. It is not relevant for this financial year, but received in cash. Therefore, it is effect for cash increase, cash received. Cash is assets. Think about dual effect, cash increase and rent income receivable increase. Therefore, cash is asset increase. Therefore, cash account debit. Rent income receivable, so rent income received in advance. This is not relevant for this financial year. Therefore, rent income received in advance increase. That is a liability. Therefore, income received in advance is a liability. Increase. Therefore, rent income received in advance account credit. Here, rent income receivable. Here, rent income. Rent income received, rent income not received, and rent income received for next financial year. That is a rent income received in advance is a liability. Received in cash. Cash increase, rent income received in advance liability increase. Therefore, cash account debit, rent income received in advance account credit. Therefore, this one rent income received in advance. Rent income received in advance account credit. Liability increase. Therefore, cash increase, cash account debit, rent income received in advance account credit. This is a basic theory you have to keep in mind. Double entry system also based on accounting equation. This is accounting equation. Equity can be divided by two parts, capital and return earning. Return earning can be divided by two parts, income and expense. Then minus will take other side. Therefore, this is accounting equation. Asset plus expense equal liability plus capital plus income. Then think about double entry system. If asset and expense increase as a result of transactional events, should be recorded debit side. If asset and expense decrease as a result of transactional events, should be recorded credit side. And liability, capital and income, if those are increased, credit side. If those are decreased, debit side.